Hey everybody, Jeremy here. I wanted to take a moment to share about a couple of key indicators that you'll notice that I almost always have in my charts. And that is the RSI, the Relative Strength Index, which is this first subgraph on the bottom of my charts here. And the second one is the MACD, the Moving Average Convergence and Divergence graph. And that's the one with a histogram here in place too. The third one that I always have is the volume. That's an entirely another subject, but I want to focus on the RSI and the MACD and what they can potentially tell us. So starting off with the RSI. RSI is Relative Strength Index, and it is a momentum indicator. It tells us the speed and magnitude of price changes. It is going to help us determine if a stock is overbought or oversold. And so you'll see on this RSI chart that I have down here, I have two lines, one at the 70 mark, this top one in yellow, and one at the bottom here at 30. And anytime price gets too far overextended to the upside, meaning that maybe it's been too aggressively bought on the short term, and it gets above that 70 zone, you'll notice it turns red here. And that basically tells us that while price might still go higher, it is technically overextended and there might not be a lot of gas left in the tank. The same is going to be true to the downside, and I have to get more chart history here to see that. So right here, you can see we crossed below the 30 mark, and you see these green arrows here where it was fighting back and forth and finally did decide to cross higher again. And that coincides with the very low prices here. That's a really good signal that it might be overextended to the downside and might be a time to take a long position. So specifically what I want to look at with this is the idea of divergence. So let's start here just looking at the last like 6 or so months, 6 or 7 months here. And the idea of divergence basically is when price moves one direction, but the indicator moves a different direction. It moves in the opposite direction. So when we're looking at divergence for the RSI and MACD both, we want to look at the high prices and the low prices for both the actual stock chart and the highs and lows in terms of pivots on the actual RSI or MACD. So let's look at the RSI right now. So we are in an uptrend. Let's basically just focus in here because this is where the main uptrend has kind of started. We had a high price, we had a low price, high price, low price right here, same time frame, right? So right there, the two indicators, the stock chart and the RSI, were moving in the same direction. They were confirming each other. But here you can see we set a high and then we set a higher low. So we had a lower low here, higher high, higher low. That is signaling that the path of least resistance is up. The RSI is trending up and the stock is trending up over that same time frame. So then we can look at the tops here. So from right here on 420 to this next pivot high, the stock was going up. From right here, same time frame, to right here, while not as steep, the RSI was still going up as well. But let's look at what happened next. Here we had basically a flat top, so equal highs on the stock chart. And yet over that same time frame, we actually started trending down ever so slightly on the RSI. Now, after that, we did get a bullish breakout. Prices have pushed higher, but that's actually often the case when you're starting to run out of steam. Bulls will make one last attempt and kind of have a blow off top before some kind of a larger correction will take place. And so while we do have a higher high, or excuse me, a higher low here and a higher high, and then technically a higher low currently, we do also have these two that are starting to counter trend between the peak highs here on the RSI and the stock chart here. So if we see this RSI kind of roll over and start down again here and break below this level, then we will be setting a new lower low on the RSI, even though the stock price has gone up over that same time we will be going down on the RSI. And that is a really good indication that the bulls might be losing steam, and potentially a larger correction, maybe down into the longer term time frame, diagonal support might be in order. I've actually been saying the last about 2 weeks that I think the bulls have gotten a little bit overextended and need some correction, and I wouldn't mind a pullback down to this 4,400, 4,420 level, somewhere right in there. It also makes sense because the 4,600 level that we just dinged the last day or two, if we throw this out onto a longer time frame and go back out to the previous all-time highs, we can see that that 4,600 level is in the zone of where we kind of topped out last time before the major portion of the bearish move started to happen. So that's a significant resistance level right there. And it makes sense that after such a long move higher without much in terms of corrections, that might end up showing us as a good time for a reversal on the short term and a pullback into a longer term support zone. So that's the divergence on the RSI that I'm seeing right now. It doesn't mean that I'm necessarily bearish, but it does mean that I'm more aggressive to take profits, that if I have long-term stock positions, that I might start selling covered calls on them. And if anyone doesn't know what a covered call is, I'll try to do a video on that here in the coming weeks, or maybe even this week, hopefully, if I get to it. But basically, the short version is a covered call is where you have at least 100 shares of stock and you sell a call option against it and you collect money for selling that. It's basically like renting out a house or renting out an apartment. You get paid for the exchange in that. And the exchange is basically you are promising to sell your shares at a specific price. So if this was a stock, let's just say that this was $100 a share right here, I might sell a $105 strike call. And if the price got at or above that by the expiration, which is usually 30 days out, then I would sell at 105. Now, if price continues to decrease, like I'm kind of anticipating here, or at least goes sideways, as long as it stays underneath that 105 strike price, I keep the premium and I keep the stock. So it's a really good way to de-leverage your account while not actually giving up your shares if you expect a short-term correction in the marketplace. So anyways, we've now talked about RSI. So the same thing applies to MACD. The MACD, and I'm just going to clear all these drawing sets, make this a little bit easier for us again. So the MACD is the moving average convergence and divergence. The second one right here, and I'm just going to make that a little bit bigger so everyone can see it. And it works very, very similar to the RSI. They're both momentum indicators, but the MACD tracks increasing or decreasing momentum and can kind of give us signals as to where the trend might be headed. So with this, if I just click and give a line, you can see that we have been setting new higher lows on the MACD. Basically ever since back here in beginning of March, we've been setting new higher lows, and the stock has also been setting new higher lows, right? We're in an uptrend. We've also set new higher highs, pivot to pivot. So here to here, these were confirming each other. They were moving in the correct direction. They were moving in the same direction. But let's zoom in and look at what happened right here. So again, we set kind of an equal pivot high right here. And yet we had a fairly drastic decrease on the MACD over that same time frame. Now we did recover, the price, like I said before, did come back up, shoot back up, but we also had this lower low. The lows were almost equal, but actually decreased, even though the lows here on the stock increased, right? You see that it's a little bit difference here. Now they are diverging. On the short term, since we have popped back up here, some traders might discount that, but on the longer time frame here, looking at the last like 2 months, or I guess month basically, from this higher point here, we are now setting a lower pivot potentially on the MACD. So if this MACD breaks down and breaks this level right there and sets a new lower low, even if the price in the chart has not set a new lower low, that is showing that there's divergence in the chart and more aggressive profit taking might be in order. So again, I'm not necessarily bearish right now. The obvious uptrend is still intact. We haven't broken any support levels in the chart, but it's a very useful tool to be able to gauge how aggressive you want to be in the market versus how conservative you want to be in the market. And if you have long positions, and don't necessarily want to take profit on those for stock, you can sell call options against it to offset a temporary pullback in price while maintaining your stock position. So I hope that helps. Enjoy the rest of your guys' trading day, and let me know if you have any questions.